This video is on financial performance metrics. Now I'm really excited to make this video today. I've been waiting to make this video because this is a fascinating area of finance. So what are we talking about here? Financial performance metrics are data that gives you feedback on whether or not you're making good financial decisions. So it sounds pretty straightforward. It sounds like it should be a very simple thing, but like everything else in finance, it's more complex than that. So let's start by talking about why financial performance metrics are important. And it has to do with the human condition. So we as a human species, we love to score things. We love to tell who's winning and who's losing. And it's really this ability to categorize things and rank things that has been one of the ways that we have survived as a species. But in terms of finance, what we would love to do is we would love to be able to rank all the finance professionals in the world from best to worst and give them all a score. Because then we could tell very easily who's good and who's bad. Unfortunately, it is more complex than that. So, I want to start with this central concept, that there is not one ultimate financial metric, but rather there's many different metrics. And so what you end up with is you end up with this list of metrics that gives you a sense of your overall performance. So this is a really simple idea, but it's important that you understand it. Now you might stop me at this point and you might say, hold on, what about rate of return? If you go on any stock trading platform, you'll see rate of return percentages flashing all over the place. Isn't rate of return the ultimate financial metric? Isn't that really all that matters? And I would say to you, it's more complex than that. And let me give you an example to kind of illustrate this. Let's say you go out and you sell a stock. And you sell this stock for a 20% rate of return. Now I'm going to ask you the question, is that 20% good or bad? Now think about this for a moment. And I'm going to ask you a series of questions to kind of flesh this idea out for you. So you made a 20% rate of return. First question, what was the risk of the stock that you sold? Was it a high-risk stock or a low-risk stock? And was that 20% appropriate for the risk you were holding? Second question, how much money was invested? Were you investing $1,000 or were you investing $1 billion? It makes a difference. Next, what was the performance compared with the rest of your portfolio? Did diversification help you or did it hurt you? How about, what was the performance of other similar stocks? Could you have bought a different stock and made a better return? What about the timing of your sale? Did you sell it too soon? Did you sell it too late? Could that have altered your rate of return? What about the performance compared to the overall sector? Did you do better or worse than the sector? What was the performance compared to the time frame? Did you make 20% over a month? Or did you make 20% over several years? That is a very different story. What about if there was an economic recession or an economic boom period when you made that 20%? And finally, what was the performance compared to other asset classes? Instead of purchasing a stock, could you have taken that money and put it into real estate or put it into starting a business and made a different rate of return? So I hope I'm giving you a sense of how complex the idea of performance metrics are. And rate of return may not fully capture whether or not you made a good financial decision. So let's talk a little bit about why it is so complex. Why is it so difficult to rate yourself? And it has to do with the future. So when you're making financial decisions, what you're doing is you're trying to predict the future. You're looking at the future and you're going to make some assumptions. And based on your assumptions, you're going to make a decision. And once you make that decision, then you're going to wait and see what the outcome of that decision will be. But here's the problem. We're dealing with time, and you can't go back in time, make a different decision, and compare the results between those decisions. And that's what you would have to do to ultimately determine whether or not you made the best possible decision. It's just not possible. And let me give you an example of this. Let's say you're a business owner and you're faced with a decision, a choice. You could roll out two different products, product A and product B. So you decide you're going to roll out product A. You roll it out, it does fairly well, you make a 20% return. But how are you going to rate your financial decision? How can you tell whether you made the right choice between product A and product B? Because you can never go back in time, make the decision to roll out product B, and then wait and see what the outcome of that would have been. Even if you rolled out both products at the beginning, you never really know what would have happened if you had put all your financial resources behind just one product. Because every financial decision you make alters the timeline. So, it's a very difficult thing to make financial decisions and to determine whether you made the best possible financial decision. Now, I want to be very clear about something here. I'm not saying that financial performance metrics are not useful. In fact, they are very useful. But it's important to understand what's the idea behind them and what they really mean, so that you can really use the data to inform and give you feedback on how you're doing in making these financial decisions. Now, I know that there's a lot of companies out there that are very intense about their performance metrics. And it's very important to hit your numbers every quarter. And that's important. But I also encourage people not to lose sight of the big picture, of what's really going on here. Because what you're doing with performance metrics is you're looking at reality. You're looking at life and you're trying to boil it down to a number. And it's very important you don't lose some of the nuance of what's actually going on. So I want to leave you with one final example. And I want you to imagine the people in your life. Just imagine all the people you know. And what I want you to do is I want you to rank these people in order of success. Who is the most successful and who is the least successful of all the people you know? Now, how are you going to come to that determination? Now, you might look at credit score, you might look at annual income, you might look at total money in the bank. But whatever ranking you use, does that truly reflect reality in terms of success? How accurate is that performance metric in ranking success? Not only that, is that really a good predictor on where people are going to be 10 years from now? what is the order of success going to look like 10 years from now, and how does that performance metric help you understand what's going on? So I hope this kind of discussion helped you understand the complexity behind performance metrics and really kind of understand what they're all about. I'm going to make a couple more videos on this. It's such a fascinating field of study. I mean, you could spend a whole career on performance metrics. But I want to leave you with this thought, that performance metrics are very important and valuable tools to have in your financial toolbox, and they will help you, give you feedback to make better financial decisions.